Hello, thanks very much for the introduction. Delighted to be here. This is the first time we've spoken in this forum. And it's great to see a whole lot of new faces. I want to talk slightly differently tonight about African new energies. Many of you will know, and there are a number of our existing investors in the audience, many of you will know the financial metrics. And we've been very focused on our marketing of the investment to say, listen, you know, frontier acreage, you can make a great deal of money, it's well risk managed, etc. But when I talk to our investors one-on-one, I get to be able to talk to them about how this company started and why we created it in the first place. And they've all said to me, listen, you've got to let the audience know why you've done it. There's an important story here that goes far beyond money. So this presentation is slightly different from our previous investor updates. In case you didn't understand the disclaimer, I'm not going to read it, but there it is. So I want to talk about how and why we started this company. The Lightbulb Moment for African New Energies was actually the first day of my university, where I was lucky enough to be at university over there. University of the Cape Town is one of the most beautiful campuses in the world, and it's very difficult to study because 3 hours you can be on top of Devil's Peak, and it's one of the world's great views. So the amount of auditing I did on Friday afternoons was not very much. But I came from a privileged educational background, and I make no apology for that. I just feel a sense of responsibility that comes with that. And on my first day of university, my roommate couldn't have come from a more different background to me. He came from a place called Bushbuck Ridge, which is about 100 kilometers from the Kruger Park in South Africa. And he wasn't just the first person who got to tertiary education from his family. He was the first in the whole of the Gazankulu area, which was the region or the province that he came from. And I said to him, so, you know, I was looking forward to, there's a girls' res with 400 girls about 30 meters from our res. I was saying, like, well, what are you looking forward to? And he said something that floored me, but profoundly changed my life. He said, you know, Steve, this is the first time that I can actually study at night in my own room. Now, that I found staggering. And what I found even more staggering, Given is a real inspiration to me to this day. This is us last year. He's now one of the leading computer audit experts in the mining sector in Africa. And he remains an inspiration to his community. And I wondered, how many other Givens are there out there? And the answer is depressingly large. Sub-Saharan Africa has about 750 million people. The population of the UK and America is less than the number of Africans who don't have electricity. And the value of electricity is underestimated. Wholesale, it costs within Southern Africa about $7 per kilowatt hour per unit. British people pay about 7 cents. British people pay about 20 cents. But the value to people like Given to be able to study at night, to businesses to be able to open up shops, for manufacturing operations to be able to operate because they don't need to run diesel, is 50 times the wholesale price. It's $3.50. And that was why we started African New Energies. We needed to find a new way to find enough electricity to give the 500 million other Africans like Given the chance to be able to realize their potential. And who knows, maybe a few of them would do as well as he has. I'm actually in discussions with Given to join our organization. Now, the start of A&E proper was when the Foreign Minister of Namibia, Utoni Nujomu, called me in 2001, where he said, Steve, we've got a chronic electricity problem. Within 4 years, we're going to be 40% short, and 2/3 of our population don't have any electricity. And we don't think they're ever going to get it because it's the second least densely populated country on earth. It's the size of Texas, but has a population smaller than that of Birmingham. So the traditional economics of grids and distribution simply wasn't going to work. And we went in there hoping to be able to recommend, it was UN funded, and we went in there hoping to be able to recommend a solar universal electricity access strategy. And it was depressing, the results that we came out with the feasibility study. It would cost a year of GDP to give the whole population solar. And it compounded at 10%, that meant that it was 10 times the cost of hydro alternatives, for example, 6 times the cost of coal. So it simply was not to be recommended. It was inappropriate to even try and recommend it. And I reluctantly went back to them and said, listen, you're going to have to find natural gas. They've got it offshore, but that's not going to work. You need to find it onshore, and you need to find it within shooting distance of your transmission lines, which are relatively sparse, as you can imagine. And their response was, well, you go and find it. Now, our team was an innovation team in mining. We were not oil explorers. And then something quite remarkable happened. I got cold called by 6 people who between them have found 35 discoveries. Now, to give you an idea, Chevron is a $250 billion company, and they've got 1,000 exploration geologists, and yet only 8 of them have ever found oil. So our 6 guys, having found 35 instances of finding oil, is pretty anomalous. The government could not have been more supportive in providing us with low-cost data, with providing us with outstanding acreage, vast acreage. For those of you American, it's the size of Vermont. It's about 22,000 square kilometers. And they gave us this acreage with the lowest commitment that industry experts had seen in 40 years. So they really want us to succeed. They want us to find that natural gas, which can enable their country to realize its potential. And we were hoping to solve Namibia's problems. It's not a big population. It's only 2.3 million people. To solve its problems, we need about 60 million barrels of oil equivalent. And that's what I was hoping to get. And we were approached by members of a number of communities up in the north, in the Ovambo Basin, the Nama, in the Orange Basin near the South African border, and in the Kalahari by the paramount, the sadly late paramount chief of the Herero. And he said, Steve, listen, the South Africans used to tell us we mustn't light up cigarettes around the salt pans. I really think that there is oil there. And we started to apply our science, and it turns out that he's right. We are almost certain that there is oil there. Is it extractable? Is it proven? No, it isn't. But our geochemistry experts are absolutely adamant that there's a live petroleum system there. And as usual, the local people know better than the PhDs. Now, we need to put the current oil price into perspective. It's been a challenging few months, to say the least, for the industry. $1 trillion of exploration projects have been cancelled. There are real questions about whether anybody should put money into oil at all. And it's very important to understand that in the current context, it's not good enough just to find oil. You have to find oil that can be brought to the market cheaply with very little extra investment. And this is where we're so different to a lot of other frontier plays, particularly in Africa. Like, for instance, in Uganda, they need about $11 billion before they get their first barrel out. So, you know, that's extremely challenging to raise in the current market. And I first showed this slide in 2012 in a speech in Johannesburg, where it was about $120. And I said that realistically, you should be planning a business at around about $60. Why? Because if you take the average since 1861, it was $33. When the political involvement of OPEC started to bite in 1973, it's up to $55 in today's money. So $120, you had to go back to 1864 before you actually saw that. So it wasn't usual, and it's hardly surprising that the price has gone down. Simply a case of the markets working. And we have built a business plan that is based on a $40 a barrel price. Might be higher. If it's lower, we've got plenty of legroom. But the point is it's sustainable at most levels of prices, unlike a lot of plays elsewhere in the world, particularly in the Arctic and shale in America. Now, who our leadership team is, Brendon, Raw, and I co-founded the company. Brendon is a uniquely gifted IT developer, one of the finest rapid application developers in London. For those of you who don't know it, ft.com is actually written in Cape Town by a company that Brendon and his brother founded. He's also written systems for BP, Trafigura, Credit Suisse, that ERP teams have spent tens and in one case hundreds of millions trying to replicate, being unable to do it. And he's written the brilliant software that has enabled us to achieve so much with so little. And we are honored to be joined on our board by two industry veterans. Peter Hutchinson was the well-sitting geologist on the Magnus find in the North Sea, which was BP's first major play. It was about 1.5 billion barrels of oil in place. At the age of 26, he was head of Africa for the whole of BP and has found billions of barrels, not only for BP, but also using proprietary techniques, using Russian remote sensing technology. And he was adamant from the beginning that we were sitting on a winner because his satellites were saying that. And they're about 70% right. So before we even set foot on the country, we were 70% confident. And Richard Jones was Russia's first country manager for BP and the head of upstream legal at BP. Now, it's frighteningly how important that job is. Our entire value of our company is underpinned on a 100-page contract with the Namibian government. We better be sure that it's right. And in Richard, we have one of the most experienced lawyers in the exploration world. He also has a funny habit of picking winners. His two previous companies that he advised were Quadrise and Nautical Petroleum, which I hope some of you know because you would have made a lot of money from them. Now, what are our key competitive advantages? Firstly, our technology triples the probability of success at 1/10 of the cost of the competition. And that's a bold claim. We'll explain it later on. But something that is of fundamental importance to us, and we don't emphasize, well, previously have not emphasized enough, is the importance of community. So often in Africa and the developing world, the oil companies have been at loggerheads with local communities. And yet, the local communities know far more than any geologist who is foreign is going to know about it. And they can be immensely valuable if we work on a partnership basis with them. And it's actually the part of my job that I enjoy more than anything else, because these people might not be able to read or speak English, but by God, they are bright. And the Sand community, some of you might know them as Bushmen, have been absolutely amazing in assisting us. In fact, I tested our geochemistry team. Now, our geochemistry team is no ordinary team. It's got 3 of the world's top 5 academics by citation in that subject. The sand people who couldn't speak a word of English were 8 times better in terms of their accuracy of prediction. So community is crucial. They own shares in this. We're very proud of the fact that a community trust is involved, and they couldn't have been more helpful to us. And the last competitive advantage that we want to talk about here is financial engineering. Oil and gas exploration is inherently risky, and if you go onto a traditional investment, if it fails, you lose your money. If it succeeds, you make a lot of money, but you pay capital gains on it. We changed that equation somewhat for our British investors by becoming the only oil and gas exploration company to get Enterprise Investment Scheme dispensation. Now, what that means is that our average investor is invested about £8,400. We've raised about £3 million to date. These investors, say they put in 10 grand to keep the numbers simple, they'll get back 3 grand from their PAYE last year or the current year. If it goes wrong, they'll get back another 2,800 if they're a 40% taxpayer. And if they've got capital gains in the last 3 years, they'll get another £2,800. In other words, for a capital gains investor, they're only risking 14% of their money. There's actually somebody in this audience who is actually in that position, who has invested in our company because they were lucky enough to invest in UK oil and gas. So that is of crucial importance because that effectively triples your upside to downside ratio, which is what investing in high-risk exploration stocks is all about. So just going to talk, we've only got about 4 minutes left, and we're not going to get through all the slides, and that's fine because I want to engage with the audience. Want to talk a little bit about our technology. It's a great honor to be here sharing a platform with Madagascar Oil. They say imitation is the sincerest form of flattery, and Madagascar Oil have been pioneers in using a lot of these techniques, and we've tried to learn from them. And the key to our technique is that it focuses on the surface. The surface can tell you so much. And what we look at, and it's based on a really simple principle. The principle is that no oil and gas trap is perfectly impervious. It's going to seep out, and that is going to have an effect on magnetic fields. It's going to have an effect on geochemistry. You're going to see cementation and radiometric changes, micromagnetic changes, and we measure all of that. And we go for a more algorithmic approach. It's quite a rigorous mathematical approach. And if we compare our approach to traditional exploration techniques, it's fairly dramatic. And that is that, and this slide was actually looking at, I asked, I'm not going to name him and embarrass him because he did say I'd drink it when I'd find it. But he is the world's leading or most cited seismologist. He's got 200 academic articles and was head of one of the super majors seismology team. And I said to him, well, if you've got 22,000 square kilometers, what would you do? And the answer was, well, shoot 10,000 kilometers of 2D seismic, focusing on 5 to 10% of the area. With 3D, no change out of 100 million. Deploy a rig and 50 million chance of 1 in 4 that we'll strike, and no hard feelings if we fail. That's pretty much our AIM-listed pitch in 2006. It's a very different world now, and only the far more sophisticated ones are going to survive. Ours is very different. Look at the surface, and we will pretty much get you producing at a 2 in 3 chance for less than $20 million. And we can do that within the space of an enterprise investment scheme. There's the acreage, bigger than Wales, and This is the geologically plausible reason for looking there in the first place. Shell, Total, BP, ExxonMobil have looked there before, but it's hardly explored. Only 4 wells have been drilled in the entire basin, none of them on anomaly. And also want to talk a little bit about the logistics highlights. When we discover, we will be able to get oil to market very quickly, in fact within weeks, because we're on the edge of the Southern African rail network. We can track about 85% of all logistics in South Africa is actually tracked. So we can get up to 30,000 barrels, which will generate about $500 million of free cash before we have to put in a pipeline, which will be very cheap to put in because we can simply follow the rail infrastructure. Trans-Kalahari railway line, which connects Marapule in eastern Botswana to Walvis Bay, very conveniently is going through our concession, and the railway line connects to us at the edge of our concession. And now it's saying that the screen is saying that we're now into question time. So thank you very much for listening, and any questions?
Anybody have any questions? Me too.
Thank you for the topic. I just wanted to ask, as this is a new energy support for the local community in Africa, although you see this as like you showed the picture of the globe of which side is light and which one is dark, as you can see, we as the Europeans and the North Americans going all the way through Russia, that we are the constant users of energy, whether it's electricity and oil. But you know, the thing is, we are concerned about sustainability, how long can it last and all that. Do you have that same concern when you're in the continent of Africa and other poor continents as well?
Yes,
Energy.
I do. Okay. And that's why we are following the approach that we have. South Africa derives 85% of its electricity from coal with a low calorific value. In fact, the carbon emissions per ton per megawatt hour is 1.02 tons in South Africa, and Namibia imports much of it. If we can go out to natural gas with a combined cycle, we'll go down to 0.3. In other words, it's a 70% saving. When we replace it with solar and go onto the front page of our website and download it, because this is fundamental to who we are, we will show how we have the financing mechanism to replace that natural gas with solar over a 20-year period without the ruinous subsidies that almost took out Spain. So we care deeply about that. But there is one thing that I would like to say that you need to consider. The dirtiest Australian brown coal-fired power station ain't got nothing on the effects of deforestation. Coal is not competing with natural gas in most of Africa. It's competing with forestation that needs to be there. You've got to give people electricity. And pretty much what I realized as a renewables person, and I really share your concern, is that you've got to give people the ability to have power that doesn't come from denuding a country that is 99% unarable of its biomass. So I hope that answers it.
Any other questions? I had a quick question on the mechanics of investing, if I may.
Sure.
Am I right in saying you're currently not listed on any UK stock exchange or any stock exchange? Is that correct? So if someone's interested in the story and they want to participate, what's within the EIS structure, but how does one buy, and then how do you get out if you want to sell?
Well, that's very easy, because City One, our brokers are here. Do you want to raise some hands? Okay, they're lurking around. And City One have been most adept in raising investment. We've raised about 3 million so far, and they've done a tremendous job for us. It's very easy to invest. And one thing I want to say as well, which I was saying to a couple of our investors, people are concerned about investing in a company that they can't sell. But remember, with a lot of these penny stocks, your spreads are so large that very often they're 40 or 50%. Now, with an EIS, if you're a typical investor, let's say you're not an optimal investor, but an average investor, you've got cover of around about 60% of what you paid. In other words, you've got a floor of 60%. AIM would give its eyes teeth for a 60% floor. You have to stay in for 3 years. But if you are covered, because you're getting 30% back up front, and if it went wrong, you'd get the other sort of 28 or 31.5, you actually are taking on a big spread. So it doesn't matter yet that we are not listed. We are going to list, but it's very important that we list at the right time, and we've proven very adept at actually raising the funds and not having to raise very much in the first place, so that when we do list, it's going to be on great news, on discoveries and on production.
And if you list, you'd expect to list here in London?
Absolutely.
Yeah. And in the meantime, again, forgive my ignorance, how's the price determined? Is it variable over the course of that 3 years initial minimum subscription? And how's the mechanics of that work?
I like the word mechanics because that's exactly how we've done it. We've based it on a Monte Carlo simulator where we've taken industry standard assumptions based on the development. We haven't used a normal 10% discount factor. We've actually used a 25% discount factor. And we've come up with a contingent value when we strike based on the fiscal circumstances on a $40 price. And we've discounted it back heavily. So each net unrisked prospective barrel of oil, we've valued it around about 1 US cent. We know that on discovery, because there's virtually no capex to get it producing, that it's going to go to around about $3. With the dilution that we expect the share price, which is currently at 11 pence, and it's gone up from about 3 pence. We expect it to, our target is that it goes to around about £18 when the 1.5 billion barrels are indeed realised.
Okay, thank you. Any other questions? Down the front here? Okay, at the back first and then at the front.
Stephen, hi. Thank you for your presentation. Just a quick one. I'm not particularly familiar with Namibia. Can we discuss a little bit more about the political risk and how much focus is on the current government, and what would the focus change if a new government was to take power?
Good question. Bloomberg said that Namibia had the lowest political risk in Africa. It's lower risk than South Africa. And it's also important to note that the best way to deal with political risk is to choose an inherently low-risk place in the first instance, which we've done. But what we are also doing, by focusing on electricity and by really making the community part of the investment, that is incredibly important in managing our political risk. Because if, say, a bad government came in, it's unlikely, but we've actually just had a change of president, and I'm personally very excited. He's an incredibly dynamic, bright man, Hage Geingob, and I'm really excited by where he's going to take Namibia. And we've had 2 changes in presidency, although the SWAPO ruling party remains in control. But the point, we need to understand that firstly, we are working very closely with the community. They are shareholders in this. And the Herero, Nama and Sand communities are not particularly well represented in the SWAPO core support. So that is an important element of our risk management strategy. A third element is the fact that we are focusing on their needs. They need electricity more than they need oil. And if we give them electricity, we are able to ensure that we align ourselves with the government, but we align ourselves with the government where the World Bank will be giving a guarantee in the case of expropriation. So that guarantee is not in place, but it doesn't need to be in place now because nothing is proven. As soon as it is proven, then we will seek that to build the combined cycle natural gas plant. So I don't think the Namibian government would take on the World Bank, the community, and thousands of investors in London. And they have shown themselves over the year to be inherently one of the cleanest governments in Africa, and they have attracted billion-dollar investments in the uranium sector already.
Okay, time for one last question down the front here, please.
Hello, can you tell me something about your dividend history, please?
Pardon?
Your company's dividend history.
Well, we're pre-revenue, so that's a very quick question.
There's no dividends here, yes, I'm afraid. Stephen, are you going to be around for a drink after the presentation?
Sure, I will.
Yeah. If you have any other questions or you want to have a quiet word in his ear, please grab Stephen a bit later on.